Mr. Roy, thank you so much for joining us on ET Now. And given the fact that let's talk about your numbers and for the quarter gone by, if you could help us understand what exactly explains the 1% decline in the retail disbursement, and if you could help us or shed some light on for the new financial year, that's FY26.
Yeah, so, just to take your first question right off, the 1% decline in retail disbursement is basically, on the back of the festive quarter. In the festive quarter, as you know, disbursements are quite high. And obviously, our disbursements in the microfinance business has been quite tempered throughout the year, especially in Q3 and Q3 and Q4. And the fact is that, in Q3, normally you have a very high disbursements in the two-wheeler business, which normally is not the case in quarter four. So obviously there has been a little bit of lesser disbursements in the two-wheeler business there, and also in our mortgage business, primarily because of the new RBI guideline that you consider, disbursement to be fully complete when the customer banks check. We have had about 800 crores of sort of disbursements which are in the form of check, but are not yet banked by the customer. So obviously those will flow over the next 2 months. So overall, these adjustments led to that small drop in disbursements on a, on a quarter-on-quarter basis. However, if you look at our overall year has been actually pretty strong in terms of our book growth. It has been a 19% book growth. We have delivered, the highest ever, yearly growth in profits. Our profit growth on a full year basis has been 15%. And the fact is that, we are sort of the only lender who is in the microfinance space who actually has seen a growth in the microfinance book on a full year basis. On a full year basis, our microfinance group actually grew 6% over last year. So, and the fact is that, our collection efficiencies in the microfinance business has come back, barring Karnataka, has come back to more or less normal. In the month of March, barring Karnataka, we had a 99.6% plus collection efficiency in the microfinance business. All other businesses, for example, our personal loans business on a sort of full year basis has grown about 98%. Our SME business volumes growth has been strong on a 37%, on a 37% SME business growth. Our home loan business has been good. So our urban businesses actually has done quite well last year. Our farm business, which is the tractor business, grew on a 16% year on year. The only sort of tempering of disbursement was in the microfinance industry and in the microfinance business because of the adverse asset quality issues. Now, we are very, very hopeful that on the back of sort of the good monsoons that we saw last year, the good Kharif and the Rabi crop, the increasing liquidity, the general budget, which gave a good amount of tax cut, we are hoping that, sort of the consumption spending in the urban areas will also be strong in FY26. Overall, on the back of a reasonably okay, FY25, we are looking at a strong FY26.
How has liquidity, impacted you in terms of the availability?
Sorry, if you can repeat the question.
The liquidity which Reserve Bank of India has released, how has that make your life easy? I mean, are you getting more capital from banks? Are you raising more from the debt market? Because, ultimately the raw material for any NBFC is access to cheap capital.
Yeah, so if you look at our weighted average cost of borrowing, our weighted average cost of borrowing has moved by only 1 basis point on a QOQ basis. And we expect that, especially, on the commercial paper, when we go to, raise our liabilities, the commercial paper rates have eased towards the sort of the shorter end of the tenor. So we expect, 2 more rate cuts to happen during the course of the year. The liquidity is reasonably, satisfactory right now. So we expect that as more and more rate transmission starts happening by the lenders to us, we expect that our weighted average cost of borrowing to ease slightly further. Though, we do not expect a much of easing in H1, we expect a reasonable amount of easing in H2, which obviously, on the long run will help us improve our NIMs.
I wanted to shift focus then and actually talk about your two-wheeler finance. That's actually down by about 26%. If you could help us understand what's actually leading to the decline, and most importantly, do you think that the stress in MFI is now actually impacting the other segment like two-wheelers as well?
No, I think it's an important question that you asked, and I would like to give a slightly detailed answer to this. As you are aware that we sort of implemented our new AI/ML based credit engine, which we call Cyclops, and it was done in the two-wheeler business. Now, obviously, we did partial implementation till the month of December, but the full business moved to underwriting through Cyclops starting January. So what has happened is that, overall, the high risk segment, which has got, quite a sort of high loss rates, we were able to actually surgically excise that out during our disbursements in Q4 FY25. Now that accounted for about 100 to 125 crores of volumes per month. So when you add it over a period of 3 months, that adds up to about 300 crores. So if you see in actuality, our disbursements in the prime and the near prime space, actually in the two-wheeler business in Q4 FY25 has remained strong. In fact, it has grown. What we have been able to do it is cut out 300 crores of high-risk disbursements, and so that has led to that that 26% fall in QOQ two-wheeler disbursements on the back of the festive quarter anyway, which is a high disbursement quarter for two-wheeler. Now, obviously, we are looking at now that the model for that particular engine is completely established and is getting implemented in our tractor business right now, followed by personal loans and SME. Right, we'll be looking at gaining volumes in our. We are feeling very confident that the tool is giving the delivered results what we had envisaged for. And we are looking at gaining volumes in the prime and the near prime segments in the two-wheeler business in H1 FY26 and also in the other lines of business as well, as we gradually implement the new credit tools through those lines of business as well.
I just wanted to get like a sort of a concrete answer, or rather just get your view. So is it safe to say that the MFI concerns have bottomed out right now? Do you think we can actually safely say that?
See, in the markets that we operate in, I would say that it has more or less bottomed out. We saw, because of the Karnataka ordinance that came in the month of February, we saw some initial sluggishness in Karnataka collection efficiencies, and those collection efficiencies also are tending upwards, and we expect them to really reach normalized levels by, say, the end of Q1 FY26. I would like to put on record that, barring Karnataka, our collection efficiencies in the month of March were upwards of 99.6%, which is, for us, we consider 99.7% as normal. So at 99.6% plus, barring Karnataka, mostly collection efficiencies were back to normal. Yes, over the weekend, we heard of the new bill in Tamil Nadu to regulate unregulated entities, which is almost the similar statutes as that in Karnataka, though we have to study it fully. So, there might be 1 or 2 months adjustment period that we might see for the industry in Tamil Nadu as well. I would like to also point out that the Tamil Nadu regulation seems to be not only directed at MFI, but it's directed at all lending entities. So, I'm sure the industry will go through an adjustment period of about a month or 2 in Tamil Nadu as well, just like as we saw in Karnataka. But overall, I think on the back of good monsoons, good harvest, both Kharif and Rabi, improving rural liquidity, the resumption of all the rural income generation program, I do believe that the worst is over for the microfinance industry as a whole. And I think we will see normal BAU business from Q2 FY26.